Imagine inheriting a fortune built on centuries of East Coast privilege, the kind that opens doors to Harvard's most exclusive clubs and Olympic training grounds. Now imagine betting all of that on digital money that exists only in computers. That's exactly what Tyler and Cameron Winklevoss did, transforming from privileged twins who once sued Mark Zuckerberg over Facebook's creation not only into crypto bro legends, but into Bitcoin billionaires. In today's episode of Old Money Luxury, we'll feature their journey from Greenwich prep schools to cryptocurrency pioneers in a tale that reads like a manifesto for modern wealth creation, and where old money meets new technology in a billion-dollar dance, as we describe. The Winklevoss twins, when old money turns into crypto bros. In 2024, Tyler and Cameron Winklevoss command a combined fortune of $2.8 billion, a figure that swings as dramatically as the cryptocurrency markets they've championed. The twins, who once rode through Harvard's elite corridors, have transformed their old money Southampton upbringing into a decidedly new money crypto empire. Their wealth stems primarily from Gemini, their cryptocurrency exchange platform, and their legendary 2013 Bitcoin purchase. When they acquired approximately 100,000 Bitcoins at 120 per coin, spending $11 million from their Facebook settlement money, more than a few Wall Street veterans thought they'd lost their minds. By the time Bitcoin peaked at over $105,000 this year, that investment had multiplied into over $10 billion. The twins split their operations between New York and Miami, with Gemini's sleek offices reflecting both their traditional background and tech-forward aspirations. Their Gemini building in Manhattan's Flatiron District serves as a symbol of crypto's invasion into traditional finance, while their Miami presence puts them at the heart of America's emerging crypto hub. While their Harvard contemporary Mark Zuckerberg might have beaten them in the social media race, the Winklevoss twins emerged as pioneers of what they call social finance. Their cryptocurrency exchange processes billions in transactions monthly, offering everything from Bitcoin trading to NFT marketplaces. They've even launched their own stablecoin, the Gemini dollar, backed one-to-one with real US dollars. Yet despite their tech wealth, traces of their privileged upbringing remain evident. They're as comfortable in Southampton's social circles as they are at crypto conferences, mixing old money manners with new money ambitions. Their investments span both traditional real estate and digital assets, though they keep the details of their portfolio as private as the transactions on their exchange. But to understand how these rowing champions became crypto kings, we need to return to the tree-lined streets of Southampton, where two privileged boys first learned the value of both competition and old money connections. The origins of the Winklevoss surname, and thus the family, begin back in Germany, arriving in America through a family that would eventually settle in the affluent enclaves of New York. And their father, Howard Winklevoss Junior, built his own path to success as an actuary and entrepreneur. He served as an adjunct professor at the Wharton School of the University of Pennsylvania, teaching insurance and actuarial science, while simultaneously founding Winklevoss Consultants and later Winklevoss Technologies, companies that specialized in actuarial and pension fund software. Tyler and Cameron were born on the 21st of August, 1981, in Southampton, New York. Their early education diverged, with Tyler attending Greenwich Country Day School, though both twins would ultimately converge on the same path toward academic and athletic excellence. At age 13, they demonstrated their first entrepreneurial inclinations, teaching themselves HTML and launching a web page company, an early hint at their future tech ambitions. Their athletic prowess emerged early. Standing 6 feet 5 inches tall, they gravitated toward rowing, a sport that demanded not just physical strength, but precise coordination and unwavering discipline. The twins' dedication to rowing would shape their approach to all future endeavors: meticulous preparation, perfect synchronization, and the understanding that success comes from thousands of identical, perfectly executed movements. When they entered Harvard in 2000, they brought with them this same methodical approach to both academics and athletics. Their mornings began before dawn on the Charles River, where they trained with Harvard's rowing team, pushing themselves toward Olympic dreams. Between practices, they pursued their studies with equal intensity, understanding that in both sports and business, excellence demands total commitment. By their senior year in 2003, the twins had established themselves as leaders both on and off the water. They had represented Harvard in countless rowing competitions and maintained strong academic standings. It was during this pivotal year that they conceived of Harvard Connection, a social network that would connect Harvard students online. Their search for a programmer led them to a sophomore computer science major named Mark Zuckerberg. The collaboration they initiated with Zuckerberg in November 2003 would set in motion a chain of events that would transform not just their lives, but the entire landscape of social media. Yet before that story unfolds, we must understand how these twins' unique combination of privilege, athletics, and ambition positioned them for their greatest challenge. On the 25th of November 2003, when the Winklevoss twins first met Mark Zuckerberg in Harvard's Kirkland House dining hall, they were setting in motion events that would reshape their futures. Their social network concept, Harvard Connection, later renamed ConnectU, needed a lead programmer. Zuckerberg, already known on campus for creating FaceMash, seemed the ideal candidate. Over the next 2 months, as Zuckerberg worked on their project, the twins continued their rigorous rowing training schedule while managing their academic responsibilities. But on the 4th of February 2004, Zuckerberg launched the Facebook.com. The similarities to their project were striking enough that the twins took legal action, filing a lawsuit that would become one of Silicon Valley's most talked-about legal battles. The dispute concluded in February 2008 with a settlement of $65 million, $20 million in cash, and $45 million in Facebook stock. As Facebook's value increased, so did the settlement's worth, reaching approximately $120 million by August 2010. This windfall would prove crucial for their next venture, though they couldn't have known it at the time. The year 2013 marked their most prescient decision. While many traditional investors dismissed cryptocurrency as a passing fad, the twins saw something revolutionary. They invested $11 million of their Facebook settlement money into Bitcoin at a time when the digital currency was still largely unknown outside of tech circles. This bold move demonstrated their ability to spot transformative technology, just as they had with social networking years earlier. In 2015, they launched Gemini, a cryptocurrency exchange designed to bridge the gap between traditional finance and the emerging digital economy. Unlike many crypto entrepreneurs who took an adversarial stance toward regulation, the Winklevoss twins pursued a different strategy. They worked with regulators, obtained necessary licenses, and positioned Gemini as a legitimate financial institution rather than a rebel startup. The twins' evolution from rowing champions to tech entrepreneurs to crypto pioneers represented more than just a career change. It demonstrated their ability to identify and capitalize on transformative technologies. But as they built their crypto empire, they were about to face challenges that would test even their Olympic-level perseverance. By late 2021, the Winklevoss twins appeared unstoppable. Bitcoin had soared to nearly $69,000 that November. Their Gemini exchange was processing billions in trades monthly, and their early $11 million crypto investment had multiplied exponentially. The Gemini Earn program, which promised customers high yields on their crypto deposits, had attracted significant customer assets. But the crypto ecosystem was about to face its greatest test. In November 2022, Gemini Earn suspended customer withdrawals after its lending partner, Genesis Global, faced a liquidity crisis following the collapse of Three Arrows Capital. Approximately $1.1 billion of customer funds became trapped. The Securities and Exchange Commission responded by charging both Gemini and Genesis with selling unregistered securities through the Earn program. The crypto winter of 2022 brought unprecedented challenges. Bitcoin's value plunged below $16,000, erasing years of gains. Gemini implemented its first round of layoffs in June 2022, reducing staff by 10%, followed by another 7% reduction in January 2023. These marked the first major staffing cuts in the company's history, signaling the severity of the market downturn. The fallout from the Earn program's collapse strained relationships throughout the crypto industry. Cameron Winklevoss publicly confronted Digital Currency Group's CEO Barry Silbert through an open letter. demanding resolution for affected customers. The situation sparked heated debates about transparency and risk management in crypto lending programs, with customers and regulators scrutinizing Gemini's practices. Critics questioned whether the twins' vision of bridging traditional finance with crypto markets had fundamentally failed. The Earn program's collapse challenged Gemini's reputation, leading to multiple lawsuits and regulatory actions. Even as they worked to resolve the crisis, questions emerged about the sustainability of their regulatory-first approach in an industry prone to extreme volatility. By late 2023, with crypto markets showing signs of recovery, the twins faced their greatest challenge yet: rebuilding trust while defending their vision of cryptocurrency's mainstream adoption. The question wasn't just whether they could weather this storm, but whether their approach to crypto banking could survive in a landscape forever changed by the events of 2022. In 2024, the Winklevoss twins command a combined net worth of over $10 billion, each brother holding more than $5 billion, marking a remarkable recovery from crypto's recent volatility. Thus, their story represents one of the most dramatic wealth transformations in modern finance, from traditional East Coast privilege to digital asset pioneers. Gemini's trajectory mirrors the broader evolution of cryptocurrency markets. While the exchange achieved significant early success, recent challenges have tested their regulatory-first approach. The SEC's charges regarding the Gemini Earn program, coupled with a $50 million settlement with the New York Attorney General over fraud claims, highlight the complexities of operating in the emerging crypto landscape. Their decision to exit the Canadian market by the end of 2024 further demonstrates the challenges of navigating shifting regulatory environments. Their journey from Olympic athletes to tech entrepreneurs to crypto pioneers has produced mixed results. While they helped bring institutional credibility to Bitcoin during its early days, recent controversies have complicated their legacy. The Gemini Earn program's collapse, which led to significant customer losses, raised questions about the risks of combining traditional banking services with crypto assets. Their legal battles continue to shape the industry's development. Beyond their famous Facebook lawsuit, they've remained active in protecting their interests, as evidenced by their recent $1.4 million victory against Treats magazine owner Stephen Shaw. These legal precedents contribute to the growing body of law surrounding digital assets and their intersection with traditional business. The twins' influence on cryptocurrency's evolution remains significant, though perhaps not in the way they initially envisioned. Their early advocacy for regulatory compliance and institutional adoption helped establish frameworks that, while controversial within crypto's libertarian core, created pathways for traditional finance to enter the space. Today, as cryptocurrency enters its second decade, the Winklevoss twins represent both the potential and pitfalls of bringing old money sensibilities to new technology. Their story demonstrates how traditional advantages, education, connections, capital, can be leveraged in emerging markets, while also highlighting the risks of applying conventional financial structures to inherently decentralized systems. Their ongoing journey suggests that success in digital assets requires constant adaptation. As regulatory pressures mount and market dynamics shift, their ability to navigate these challenges while maintaining their position in both traditional and crypto circles will determine their lasting impact on the future of finance. And now, we'd love to see you in the comments. Are you a holder of Bitcoin and believe in its revolution? Or do you think it's all fake money, so to speak? We can't wait to hear your thoughts below. And thanks again for joining us for another episode of Old Money Luxury. Cheers, until next time.